Well, I think fortunately the anchor investor issue is fully subscribed, in fact oversubscribed. And I think currently, if at all, Adani Group has to basically bring down the price because
Basically.
the current market price is lower compared to the lower band of the FPO price. It would be somewhere around 20 to 110 because 10% reduction in the price is possible in a situation where I think the price does not hold at the level at which it was announced.
Got it.
Should that happen, then I think at around 2810, I think this issue can go through. That is what my belief is. However, I think it would be hurry on my side, I think, to conclude that part of it. Let us get, I think, more amount of clarity about, I think,
Okay.
fundamental questions which I asked earlier.
Deven, whatever we might say, it's clearly been the Adani Group stocks and the upcoming FPO that have just been shaking up the market and investor sentiment. What would you attribute this to? Is it sheer nervousness, or do you find genuine cases to question, some of what has been brought up in the Hindenburg report?
Yeah, well, I think one important point, I think, which I would like to highlight here. This particular short selling which has happened outside the market, which means I think this instrument which was I think created outside Indian market, and I think by creating a separate derivative instrument. Now this is quite scary. I think today this instrument has actually worked against a particular group of stocks. Tomorrow, such kind of opaque instruments where the transactions are not reported in Indian market could possibly create havoc in any kind of market, any kind of stocks, which could possibly would be quite detrimental to the overall interest of the market and their investors. While the derivatives are accepted way of, I think, generating liquidity, it should not happen that the derivative becomes the instrument of mass destructions. I think this is one important point which is possibly forgotten while allowing the derivative speculation into the market without any kind of a control or a check. I think today this particular situation has opened up the alarming bells as far as the I think the rampant use of derivative by creating the wealth destruction in for creating the wealth destruction. This is the only point which I would like to drive at this point of time. I must repeat and say that I'm not against derivative market. I'm not against the liquidity that it creates in the market. However, I think any instrument so created which is outside the purview of the regulator of India and operates from the country where I think it is not governed, probably I think that needs to be checked and checked thoroughly before I think it is being allowed for trading from anywhere in the world. Today, we do not know what is the quantum of shorting that Hindenburg has done. We have no idea about that. We also do not have any idea about, I think, what kind of instrument it is where the shorting has taken place. If on one side all the other Indian investors are required to disclose their trade, why a part of investors, I think, who have operated the market from any corner are not allowed, or are not asked to disclose their trade? Is a very, very important point. And that trade, I think, after concluding, I think should not be disclosed. I think it
Deven,
should be done on the market platform.
If you like the video, do like, comment, share and subscribe.